Hey guys, good morning, welcome to the live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra low commission, which starts at 99 cents per lot. Our accounts spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HEMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips, and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.
Hey guys, welcome everybody. Welcome to Stocksnipertrading. This is our Memorial Day special, guys. Welcome everybody. Happy Memorial Day to everybody in the US that is enjoying this beautiful day. Guys, today is going to be more of a lighter session, okay, because we'll go over everything. We don't have any US banks open today. Wall Street is not open, so it's going to be a lack of volume today. So we're going to go over a few things, why maybe we shouldn't be trading on days like today. You should be taking a day off, but the markets are still moving. There is still some movement. There is still some pips that can be made, but you should get in a habit of taking the day off when the US banks are closed and the stock market and things like that. But because spreads and slippage and just lack of volume is not the greatest to be trading. So we will go over these things. We'll go just over a little bit over 2 hours. Okay, so there's things that we'll talk about. Any questions that you guys have, I'm here to help and answer all of your questions that you guys we can talk about. But we'll go chart to chart to chart, and we'll go slowly. We'll break things down, and then if you have any questions, we can talk about things. Okay, so first off, welcome to everybody. Welcome everyone. I hope everyone had a great weekend. Today's date is Monday, May 29. So we're almost in June. We're almost at month end. That's really important too with trading. Just wrapping up this month. Also, debt ceiling, guys. You probably heard over the weekend that there was a tentative agreement, but nothing set in stone right now. So the deadline is June 1st. So we're going to know more about coming on Wednesday and Thursday coming up this week. And that's really going to affect the markets too. So the markets can be waiting for that news. And then also we have NFP this Friday, which is another very, very important day. Okay, so thanks for everyone joining YouTube. Thank you guys for everyone that's joining. I appreciate all of you guys on to join on a day like today. What we're going to talk about first is we'll go through a little bit over here. What is this? Because a lot of questions are what is this platform over here? This is Bookmap, guys. So this is a live liquidity feed in the market. We're looking at the futures contracts. This is specifically Dow Jones. Okay, so here we're looking at US 30. We can look at different securities. We can look at Nasdaq. We can look at S&P. We can look at gold futures, crude oil. There's various securities you can look at. You can also get into equities. You can look at individual equities such as Tesla, Nvidia. We can look at Apple. We can look at Amazon. We can look at Google. So there's a lot of things you can do with Bookmap, and this is called the depth of market, DOM over here. So this is the current order book in the market, and these are our bids below us and our offers above us. This is the session volume profile. So this is the volume that we have going on right now. It's pretty light for like this time of the day. Normally we'd see more volume in the market. It is making some moves right now, so there is some pips to be made. But again, double check your broker to make sure your spreads are still pretty competitive. Like on a day like today, you don't want to be trading and your broker has high spreads today. So that is a factor that plays in when banks are closed. Spreads do increase with lack of volume in the markets. So this is all part of your job to look at with your broker every single day, okay? And this is our VWAP. This is called the volume weighted average price line. So you can see that most of the volume is attracted to come to this white line and transact here. So it's said that when the price is below the VWAP, you're getting a good discount. It's a good fair value buy down there. If the pricing is above the VWAP, now it's starting to get a little bit pricey up there. So this is where sometimes you see it get shorted down and then it comes right back down to test the VWAP. But that's not always the case. If there's momentum in the market, if there's news, if there's a lot of volume, if there's a breakout, then things can change. And then down here, this is an indicator that you can use to complement Bookmap. It's the cumulative volume delta. So this is like net sales. So we have, you can see the 0 is the baseline. Here we have 200 positive, and then we would have like negative 200 down here. So this is taking into effect all of the transactions that are occurring, and it is just buys minus sells. And so here we have a positive delta. So a lot of these transactions are all positive volume. So it's buy side currently right now, but this could easily come right back down. But it looks like it's developing some bids. It might be coming up to take out some offers up here. And then what we have over here is heat. It's called a heat map. You guys are probably very aware of what a heat map is. You can have heat maps on even TradingView and things like that. You can have a heat map. A heat map, all it is it's basically showing you where there's a lot of offers in the market, where there's a lot of bids in the market, where there's a lot of pending orders waiting to get triggered. Johnny, do you have to buy data for all segments? Yeah, like here you see I'm subscribed to Rhythmic. So I pay for Rhythmic data, which gives me everything that I'm looking for here. All of this data for NQ, for Dow, for ES Mini, for crude, for gold and things like that. So yeah, you have to subscribe to a data feed with these live liquidity platforms. Okay guys, so thanks for everyone for joining. I appreciate all of you guys. If you guys can hit the like button, subscribe to the channel, hit the notifications, because we might be starting at different times of the day for YouTube. So how is everybody? First of all, I hope everyone had a great weekend and glad to see everybody back. What we're going to do is we're going to look at news. Okay, so we're gonna take a look at this entire week, what we have to look forward to. So normally on a weekend, I normally do all of this, but since today is a light day in the market, maybe we'll do it today together. So most of you guys, okay, if you got up to trade for London, you should have been aware that the Swiss banks are closed, the British banks are closed today, the French banks are closed, German banks are closed, and more specifically, right now the US banks are closed for Memorial Day. Okay, so how was trading in London, guys? I wasn't trading in London. How were you guys trading in London? How was it? Ferdinand, how can you get on Bookmap? You can use our link in the description. If you click on it, it'll take you directly right over to Bookmap, and there is some promotions you can get. And what I recommend is for everybody here is to maybe download Bookmap and practice on Bitcoin. Practice with BTC. It's free, doesn't cost you anything. Okay, so we like free stuff. There's nothing wrong with getting the platform and get familiar with it. BTC moves. It's got a depth of market. You can follow the VWAP. You can follow the heat map. You can follow all of those things. And when you get better at it and you understand how Bookmap moves, then maybe you want to subscribe so then you can trade other securities. But for free, you have BTC. So there's nothing wrong with that for learning purposes. Okay. Okay, so we have a lot of banks closed today, and then if you're going to trade this afternoon, there is then we start to get into JPY and AUD, things like that. Then you can see that the schedule fills up. We're going to go over on tomorrow and the rest of the week. First things first, news. Okay, over the weekend, did anybody hear in Germany that they just declared that they are in a recession? Finally, so. We've kind of known this maybe for about over a year to 2 years now, but officially to them they are in their recession in Germany. So DAX also hit, like last week, all-time highs, then sold off a little bit. So if you're in Germany, you now are officially in a recession according to the smart people. So what is a recession? It's 2 negative GDP quarters in a row. We've been seeing this for a long time, but right now it's official. So Germany, please, let's get you through this recession. Hopefully it's not long, but all of Europe is suffering right now with energy and things like that. So it's the summertime right now. More will come as we get into the fall and winter and those cold months. So, and then it's a trickle down effect. Okay, so it all starts like where it's starting. We've seen a lot of big banks go down in Europe with Swiss and Deutsche Bank, and now Germany's in a recession. So it doesn't look good for Europe right now. So yes, this will come over to the U.S. US is already probably in a recession, but hasn't admitted it too. Okay, so let's continue looking. Tuesday, tomorrow is going to be a bigger day in the market. So with banks are back, then we get more news and more volatility in the market. So tomorrow, 3 a.m., we have some Swiss GDP quarter over quarter. We've got some Spanish flash news. 4 a.m. we got some European news, Italian news coming in. And then 10 a.m. these are the big folders. Okay, so when we see red, you should be looking at the red folders because these are high impact, especially when you have USD. These are the big ones. Okay, so especially for us trading in Wall Street, trading the indices and things like that, you got consumer confidence reports. So this is going to be important. Then you got speakers, okay, later on in the evening. So if you're trading anything to do with AUD, the Australian dollar, make sure you are aware that there's a red folder, and we have speakers at 7 p.m. Eastern if you're trading. Also at 9:30, they're releasing their CPI year over year in Australia. So you're going to have some volatility if you trade those pairs in there. And then going into Wednesday, is May 31st. So our deadline is June 1st for the debt ceiling. So that's going to be very important. And then we have lots of all day. We have European news on Wednesday, German prelims, CPI month over month. Then we move into 8:30. Okay, so we have lots of news. Then the JOLTS job openings, because this is NFP week as well. So this is going to be very big for Friday coming in for NFP. Most of you guys are aware of what NFP is, non-farm payroll, but it can be very volatile. Look at Thursday. Thursday is a huge lineup of news, very, very busy day on Thursday. So you can see today is very light. There's like nothing in the market. And then you look at a day like today, like over here on Thursday, and it's a very, very busy day in the market. So there's going to be a lot of volatility. There's going to be a lot of volume in the market. There's going to be a lot of big swings in the market because you've got a mix of low impact, medium impact, high impact folders. Lots of it coming out at 8 o'clock, 8:30 a.m. Eastern. Then we move into ISM manufacturing at 10. So very busy day. And then finally, we're going to finish the week off with NFP, and it's right here. So these three big red folders, Friday, 8:30 a.m. Eastern. This is going to be a big day. Okay, so these are unemployment numbers in the US. So you can see that they already have projections coming out, forecasts. So the previous was 253,000. They're already forecasting for great results, 189,000. So less Americans applying for unemployment, meaning the economy is doing good, they're working, there's more jobs available, so that's good. That's good for US dollar. So this might, if that's the correlation, good for US dollar, then we should maybe see a decline in gold. We should maybe see a decline in the markets. You should see a decline in the pound or the euro if you're trading those, but not set in stone. Okay, those are just speculations. Okay, so Friday is going to be busy, Thursday is going to be busy, today is pretty light day, but things will get started tomorrow. Okay, so that's our week ahead, what we have to look for. But also debt ceiling is very, very important. It's not listed on here, but that's a big news that the deadline is on June 1st. There's a tentative agreement in place. So we will go from there. We do not want US to default on their debt, or else things can get real nasty, not just for the US, but for everywhere else around the world, because China and Japan, if US defaults, then China and Japan are going to go through probably a really, really difficult situation. So there's a lot of countries who are waiting for that news and are very nervous right now. So hopefully US does not default, because it could be a domino effect around the world, especially for Japan and China, who have loaned US lots of money. So if US defaults, that's going to affect Japan and China quite a bit. Okay, so guys, we're going to get started. We're going to do a top down on the Dow Jones. Okay, so I'm going to go a little bit slower than usual so that we can be all on the same page. And if you guys have any questions, then I can answer your questions for you guys. I'll go through if you guys ask any questions right now. Michael, how much is both Bookmap and Rhythmic Data? It varies depending on the package that you're going to subscribe to, but it's roughly anywhere from $50 to $100 a month for everything, because not only do you gotta subscribe to Rhythmic, that's about a $30 to $50 plan, but then you gotta also subscribe with Bookmap to either a global or a global plus, depending if you want to look at equities too. Like if you don't trade Apple or anything like that, and you're not worried about that, then you don't need the global plus. You just need like a global. But there's also other platforms too for depth of market and live liquidity, but they have a fee too, and you also have to subscribe to one data. So the prices vary, guys, but roughly about $50 to $100 per month. Okay. Oh, that ceiling is changed to 5th of June. Okay, so they extended it 5th of June, guys. Okay. Hopefully they don't need to go that long. Maybe they can come up with a decision. It's not that complicated. If you're in, okay, just like my child, okay, just like my daughter. If she takes my credit card and she's spending it like crazy, I'm probably going to say to her, okay, I think it's time maybe we control your spending, maybe we spend a little less. That's it. That's all the conversation. That's all America has to do right now, is just maybe just have a adult conversation and just say maybe we should control our spending right now. That's it. And that can solve world issues. But it's not that easy when you got too many smart people involved. Okay, so what we're going to do is we're going to look at US 30. Okay. Amazed. Do they have usual spike at 9:30 today, or it's slow moving? Well, the usual spike at 9:30 is with the stock market being open. We don't have a stock market open today. The stock market is closed for Memorial Day. So it'll just be natural moving there. And then guys, the markets also closed early today, the bond market, with the markets being closed. So if you start to see securities close this afternoon and they're not trading, then I'm telling you right now that just be aware of that, because then you might be holding some positions around 1 or 2 p.m. today, depending when the markets close, and you might have to hold this into a swap. So just know that going in ahead of time, that markets close early today for the holidays. Okay, and we don't have Wall Street open. Okay. Okay, so we're going to look at US 30. Okay, so are we all getting better at doing a top-down analysis? Okay, you don't have to take a lot of time on doing a top-down. All a top-down is basically you're getting a bird's eye view of the higher time frames, so that we can bring it down to the more lower time frames for intraday trading or scalping, but also knowing where our critical levels are in the market. So what we're going to look at is the daily. Okay, so right now this is 5 minutes, and I know some of you guys already took a buy right now. Some of you guys are messaging me that you guys are already in profit. Okay, so if you took a buy, that's great. But we don't know anything. Like if I'm just to trade this, I have no idea how it was moving last week, anything. So I want to get a better picture of how US 30 is moving. So what I do is I go to the daily, and these are all the daily candlesticks. So now we see a bigger picture. I can see, like right here, a double bottom at 28,600. This was the bottom. It came down September, at the end of September 30 and the beginning of October. So we had a double bottom down here. So that's our low, 28,000. And what happened when we came up there? We pushed up and we broke out this high. We took out the high. We came back down. We consolidated. The next push down was 31,400. So it was higher than the previous low. So essentially it's making a higher low, but no more new higher highs. So then the market is just consolidating now. Okay, there's a lot of, these are big daily candles. There's a lot of volume in these. There's a lot of room for you and I to scalp and trade these markets, but we're still in a range right now. The market is still just trading sideways. It is making some moves, but it is waiting for the bigger things in the market to come. So we are not breaking. Do you guys understand? Like with wicks, okay, these are highs and lows. So when you see a lot of wicks, okay, like down here you see a lot of wicks, it's telling us that every time the market is coming down here, it's getting rejected. These are big red candles. This was a big red candle, came down here, and it went right back up. This was a big red candle that came down here and went right back up. Big red candle came down here, went back up. This was a red candle, came down here, went back up. This was a red candle here and went back up. So what is that telling us? Every time, like a lot of traders just look at this, but they don't understand what's going on here. So I really want to make sure that we're all on the same page. We can take our time today to learn, okay? The markets are not as busy, so this is a good, because this will help us on a day when markets are trading really well, that you understand this. So do we all understand that rejections like this are showing that buyers, every time it comes down to an area of support or demand, buyers are bringing it up. So in this zone right over here, like if I was to highlight this entire area, this is why I make this kind of area green, is to show me that every time it comes down here, it's going back up, going down, going back up, going down, back up, going down, back up, coming in here, back up. So this is a static zone, and it's showing that there's a lot of accumulation going on in here to the buy side. Every time it comes down, buyers are coming in this area. And then if you were to look to the left of the chart and you brought that same zone, you would see, like right over here, that when it came 1, 2, 3, 4 days down into here, in November 3rd, 2022, it bounced and retested this green box and continued to push up. So if I didn't know that, but I only knew that, that's why we want you to get in the habit of bringing these type of zones across. Because once you identify something, then it might come in play at a later time and date. So see right now, like I have nothing over here, but I've identified this zone. I can now bring this zone across into the future, and maybe at some point it may come back down here and come down, and then maybe it's going to come back into this green box and bounce again and get out of here and bounce out. It might just bounce a little bit and then it gets pushed down again. And then if it breaks, like we haven't really broke this area, if it breaks, then we retest here. All we're doing is we're just changing the color of the box, because if we close below, then we're retesting to see if there's going to be more offers or resistance here. So the zone remains the same. The only thing that I do is I change the color to help you guys identify that it is possibly a supply. So I make it red like that. So if we were to close below here, then we're retesting and there's more supply, then we're going to push down. And where could we push down to? We'll possibly push down to next areas where there is some support in the market, down to 30,200, these levels. Okay, so this is pretty just basic stuff. We're not doing anything very complicated here. We're just trying to identify some key areas in the market and understand if there's supply or demand. Okay, so do we all understand that point? Is that do we get that, what I just did there? You guys are pretty quiet today. Did you guys have coffee, or are you guys tired, or what? YouTube, you guys here? Hello? You're tired a bit, Luke? If everybody's tired, let's all wrap it up. Let's all go back to sleep. No, I'm just joking. Oh, Wayne, you're a little high. Okay, that I understand that. My voice sounds different. I'm feeling a little bit better. Trying to get rid of the strep throat. Feeling better. Okay, so let's continue going, guys. Okay, so that's just a zone. Okay, so we understand that. But now we got to understand, like, let's look at last week. How was the market moving last week? Okay, so we can clearly see how it was moving last week, because this is Friday, this is Thursday, this is Wednesday, here's Tuesday, and here's Monday. So last week, how did we open? They gapped the market down, okay, and then there was a green candle that came up, but you see where it came up? It's lower than this wick right here. So automatically it's telling us that there's a lower high. Okay, so we got pushed down on Monday. It came down, that's our low. But then when we came down to the low, there was some bids down there, and then we closed right here. So it closed like like an indecision candle, like a spin top with some bearish volume. And we continued next day going into Tuesday, where again it opened green, it came up, but got rejected. And this high is lower than that high, lower than that high. So it's lower highs. So we are pushing down. And it pushed down, but then when it's coming down to critical level right here of support, you see how it reacts right into here. So it stops. It got a wick right here, exactly, right into these support levels, and it came back and closed. Then the next day, Wednesday, midweek. Midweek are very important in the markets, because Wednesdays can either start a reversal in the market, or they can continue a trend in the market. So Wednesdays are normally called Wednesday midweek reversal or midweek continuation on the bigger, if you're like swing trading and things like that, on the bigger time frames. So on Wednesday we continued to the downside, so it was a continuation. Again, we opened green, small wick got rejected. It broke the lows here and came and closed down. Then Thursday, again, we opened green. Did we at least attempt 50% of the candle? No. So that's telling me that there's a lower high and the volume in this body is still holding down, and it broke the previous low and it came down all the way down to 32,580. Then we came up. Friday was a big day in the market. Okay, Friday was very, very strong day in the market. You see how we opened? We came down red a little bit, but we didn't break any new lows. Did we break Thursday's low? No. So we made a higher low. So we came up and then we took out Thursday's high. Then we're measuring about 50% of this candle. We came up to it and continued pushing. We took out the high of Wednesday and we closed above. So this is a very strong pattern that we have right here to maybe possibly reverse the market into this week. And here's today's candle. So how did they open today's candle? What did they do? So normally you're going to have maybe some gaps over the weekend. So we closed right here on Friday and then they gapped it up opening and it came down, see the wick, and then it filled the gap. And then you see where it stopped? It stopped right where we opened. So that's what's called a gap fill. Okay. Some of you guys were asking this question last week. What is a gap fill? It's when the market opens up, like here it closed on Friday and it opened up here. So there's a void in here. And then, so not always, it's not 100% guaranteed, but from time to time, it's got a high probability that the market wants to come back down to fill this void, to fill that gap. Once that imbalance is filled, then it will go back up and continue going where it's got to go, okay? So, but in this situation, we opened, it came up bullish up to here, made the high, we came back down, filled the gap, and then this is where the volume is right now. Okay, so what I like to do when I'm doing my top-down analysis is I always normally locate the high and low of the day. So right there, that's our high of the day. This should become very easy for everybody right now. This should not be complicated. All we're doing is placing a line at the high of the day, the high wick. Okay, so I know now automatically that US 30's high of the day is 33,255. Okay, give or take a few pips here and there. It's not going to be 100% accurate. And I'm locating the low of the day. All I did was look at the low wick. Okay, pretty simple. 33,118. Okay, now I just have information about today's range. Nothing else. Okay, so now I have to use existing bodies that have already printed to help me identify where this thing could go this week or in the future or in the next 30 minutes if we're going to scalp. Okay, so what is another critical area? We have to find out in between the purple lines. We got to find something. So we have really close to us is Friday's high. So I'm going to place a line at Friday's high, but it's not going to be purple. Okay, I only use purple for high and low. Now I use a yellow line. You can use whatever colors you want on your charts. Okay, it's not the colors. Okay, it's where I'm placing the lines and why I'm placing the lines here. Okay, you can do pink and green if you want. I don't care about the colors, but as long as the colors make sense to you, because these colors make sense to me. Like I've been trading with these type of lines for a long time. So when I'm on a lower time frame and I see 5-minute volume come to a purple line, I know that it's at a daily high or daily low. I know if 5-minute volume comes to another yellow line, I know it's a critical daily level, but it's not the high and low of the day. It's just another critical level. Okay, so I placed it at Friday's high. And here's the volume now inside here. So from the high to here. If I don't know anything, normally what I do is, I'm a psychological trader, so I like to place it at either halfway point. But I also have wicks over here. I have a wick right here. I have a wick right here. So I got some information right here from some historical data where the market came down to and found some support here. So I'm going to place a line at this wick right here, yellow line. So now I've got some data, 33,211, 33,164 inside. The volume is down here now. So where's the next path that we could come down to? We could possibly, if it's still bearish, we could come back down to this yellow line and break, and then come down and maybe possibly fill back down to, it's a big red candle coming down to the low of the day. And then when we get to the low of the day, we can come back up. But if it breaks and goes down, where could it go? Okay, it's not just going to drop all the way down here unless there's a big significant news in the market. But another natural path where it could go is to see these two bodies right here. There was a gap in the market as well here. So you're not always going to get, I see a lot of traders are like getting stressed out saying, Ron, should I place it right here or should I place it right here? Wherever, okay? It doesn't matter. You could also place it right in the middle of that gap, like right there. If it's all personal preference, you can place it right at that body, or right in the middle. As long as you got the general area, that's the important thing, okay? Whether you place it here, it doesn't really matter, okay? But just if you're undecided, right in the middle. Maybe that might make your decision easier. And then if we're coming back down, so if we come all the way down to this and we continue push down, where could we go to? Because we've got a big green candle coming up on Friday. So next level is like right here. Here's a body, here's a wick. We've got 3 wicks here. So there's a lot of touches over here in this area. Okay, so this wick, got a wick there and another wick. And then below, all I have is this big bullish candle, and then just a couple impulse breaks right there coming down. So I always like to identify 50% of a big strong like bullish candle or a big strong bearish candle coming down. So if I was looking, where is 50% of this green candle? The body, from this body right here to this body. If I'm just guessing, where's half of it? I would probably guess maybe half of it is kind of right in there. And then what I would do is I would place this as a green box, okay, at halfway. So this is letting me know that this started strong, closed strong. So if there's ever any pullbacks, I'd like to have half of this body hold. So if this is a big red candle come down, I'd like these buyers to hold it up here, to maybe bid up this area, so that if it comes down, it holds and then goes back up. Because if we lose 50% of this body, then it's got a high probability that the selling pressure will continue and take out the second half, and that's more like vulnerable, this half, because you've already lost like the heart of consolidation right here. It's called the golden zone right here. You've probably heard that term, but if you lose the golden zone, then it's got a high probability that it might lose the rest of the volume and then break for low and continue pushing down. So this is a very critical point in the market in order to hold up this bullish candle. Okay, so we're nowhere near there right now, but we still have to identify it just in case it visits this area this week or today or tomorrow. And then if it breaks, again, where could we go down to? Okay, if there's an impulse break of here, it could come down right down to this wick of this candle right there. You could have it there. If we continue pushing down, look here, I get 3 touches here, a body, and a wick. This is a really, really critical, important area right here in the market. And it's a nice psychological number too, 32,750. And then we have another low and another low. And that's it. That's kind of shows our most recent downtrends right there. So then when we have nothing below us, you got to look to the left of the chart. And then there it is again. Okay, so see this wick right there, 32,578. Look to the left of the chart. Is this not 50% of this bullish candle? Okay, from the body to the body, is that pretty much half of it? Okay, there's going to be some technical people in here say, Ron, no, that's not half. I understand, okay? But I'm just saying by eyeballing, okay? And I saw some of you guys have already smoked something this morning, but you can see right there it's about half of it, okay? So here it was resistance, red. And then with the volume closing above, you should have a green box. And if you bring this green box across, then you maybe would have picked up Thursday's low for a nice little buy right there, okay? Because you would have identified it because you would have done your top-down analysis and you would have seen, you would have said, oh, that's 50% of that big bullish candle that started this big move that took out that high. Maybe I should locate that zone. And yeah, if you did, you would be well prepared for maybe to catch that move. So what you got to do now is bring this box across too, okay? Because at some point in the future, maybe if the market is pushing down, it might revisit this area again, okay? But right now I'm doing a longer top-down analysis than I normally do, but I just want you guys to learn, okay? We're going to use it as more of an educational day. So that's good enough for below us. Now, we need to have just maybe something above us. Here's the volume. What happens today, this afternoon, or tomorrow, there's a little bit of a rally, and then the market starts to push up to here, and we're right back to the high. So it's got a wick, it's a big green body coming up, and we're ready to break out of the high of the day. If we break out of the high of the day, it could be an impulse break, it could get rejected, it could be a false break, but if we're breaking out, where could we possibly break out to? So then maybe we're going to test the next body right over here. Who said we don't trade gold anymore? Push P Media. We trade gold every single day. Okay. We also have gold signals. So I'm not sure who told you that we don't trade gold anymore, but we trade gold every single day. It's not personally my favorite security, but I still trade it with you guys, and we do have signals, and we're trading gold all day, every day in here. If your accounts are too small for US 30, then maybe you got to step up and grow your accounts, or you got to do a prop firm for other securities. But we do trade gold in here, so I'm not sure where you're getting that information from. Okay, so high of the day, if we do break out, we're going to possibly come up to right here, 33,300. Okay, and if we continue pushing up, maybe we're going to get up to 33,400. Okay, see, we're trying to do something educational, and then again we're just talking about gold. I think a lot of this stuff goes over a lot of people's heads, what we're doing right now, and what I'm trying to teach you is you could be learning this and scalping gold with knowing this knowledge, okay? Whether we're trading it or not, but a lot of people, it goes over their heads what I'm doing right now. So whether you want to learn this, it doesn't matter to me. I know how to do this. If you want to learn, then tap in, learn how to do this. Stop worrying about gold right now. I'll go right over to gold, and we'll show you how to do this with gold. But again, you're going to see whipsaw action, and you're probably going to get real frustrated trading gold on a holiday. But it's all good. It's whatever you guys want to trade. Okay, so above us, I've got some couple daily areas. Okay, and more specifically, which area is very, very important. If it comes up on this uptrend, it would be like this area here. We're starting to get rejected here and here at this big body right over here. So you got to also have maybe an upper supply zone just in case it gets up here. So like if I'm saying 50% of that candle that started this move, that's 50%, and right there I would have a red box just in case it gets up there. To tell me if it's coming up green, I just want to be aware of this 50% candle, because this was the big red candle that kind of started this move coming down last week. Okay, so we have to be well aware when it comes back into here. Okay, so now that's the daily. Okay, do we want to stay on the daily and just watch this daily candle? If I was a swing trader, I would be watching where this thing could possibly move, but I'm not a swing trader. Okay, so I'm a scalper. So I need to now break this daily candle and dissect it down further. So we can go into the 4-hour. Okay, most traders go into the 4-hour too. There's nothing wrong with that. I personally just go right into the 1-hour. But if you want to go to the 4-hour, this is the 4-hour. See the gap up, it came up, push right back down. 4-hour candle came up, push back down. These are doji candles, so 4-hour volume is very consolidated, lots of indecision in the market, so it's not really moving. So it's not favorable to be trading today. That's what we're trying to tell you. It's bank holidays. Okay, so it's consolidating, trading sideways after a big bullish move right here, 6 a.m. Friday. Big strong move, now sideways. So let's go into the 1-hour. Now we can start to see we're breaking those 4-hour candles down. We get to see a bigger picture. So there's the gap in the market right here. This is where we closed on Friday, 1600. That's 4 p.m. Eastern. Market's closed. And here is the gap up where it opened on Sunday. So at 6 p.m. Sunday, we opened up and we made our high of the day. And then it came down and closed down here. Then we continued to push down. Here's 7 o'clock p.m. Eastern, 8 o'clock p.m. Eastern, 9, 10, 11. And look at it took 1, 2, 3, 4, 5, about 6 hours, but it filled that gap. So there's that gap from here all the way up here. There's the gap. And it filled it, okay? It came all the way down and filled it. And once it filled, it went right back up, okay? So those are called gap fills in the market. They don't always fill. They might fill at a different time, okay? Some securities, like we might, if they gap up, they might take maybe a 3 days to fill, maybe a week, maybe a month, maybe a year, maybe 10 years. But that's what causes an imbalance in the market. So now the market has balanced itself out again, and then the buyers were interested to come back in at this area where it used to be right over here again. This area used to be resistance. There was an impulse break, impulse break, impulse break, impulse break. So that's red box. So if I brought this across into the future, the box remains the same, just the color. Switch the color. Okay, so right there, this was, it came up, got rejected, came up, got rejected, came up, got rejected, came up, impulse, got rejected, came up again, got rejected, closed right there. So that is a red area, okay? You can tell by those upper wicks. We just did it for the green side before. And then you identify the box, bring it across, turn it green. So if you were ready and you saw all of these red candles coming back down, now they're coming down into the green box, and what happens? It's a bullish candle that prints off there. One more pullback to 50% of the body, and then we start to move. So when it starts to move like this is a possible buy, and then place your stop loss below the green box. And then you take it right back up to next target, get your pips and get out. That's just for trading any time frame, okay? But we're still holding this area. So bring this green box across now at the daily low. We're developing a little bit of a double bottom now, okay? So it came down, back up, there's the neckline, and back down, double bottom. Now, are we going to build off of this thing, and are we going to continue to push up to the neckline, possibly break for a higher high above that wick, or it's got two rejections, equal highs. Maybe this thing is going to get rejected and come back down to here. And if it can't hold here, probably going to fill the imbalance down to this daily yellow line, 33,080. Okay. So we've got a little bit of a double bottom working on the 1 hour, but also the 1 hour. Now, when I go into the 1 hour, I want to get some information about the 1 hour candles. These two tweezer top wicks here and here, I'm going to place a white line. So the white line now is telling me that's the hourly high rejection, 33,180. And where are we coming down to? 50% of the green candle, right? This big green candle, half of it. Where is it? Right there. Okay, so that's where we're coming down to. We're testing half of this body of this candle to see if it's going to hold. But I'm going to place my line at the critical bodies, here and here. So I can see we just came down and back up. So now I'm trying to like box in where the hourly volume is between the white lines and that critical daily. So where could we possibly move today? We might consolidate in here. Maybe it fills from here to here and goes up a little bit, or we come back down. We test this green box. If it breaks, it comes down into here. Or we might just trade sideways in here on a slow day. Okay, so let's go to the 5 minutes now, and then we'll look at another security. Because I can't even speak without people just saying, Ron, gold, 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 gold. Okay, so 15-minute loot. If you want to go to 15-minute, go to the 15-minute. Like again, are we listening to what I'm saying? It doesn't matter what time frame you want to go. You can go daily, 4 hour, hourly, 30-minute, 15-minute. If you're a 15-minute trader, look at on the 15s. Okay, here, this is the 15s. Okay, so when the 15 minutes come down into the big green box, got to make a decision if you're a 15-minute trader. Okay, over here, 15 minutes are pushing up. So you can buy here, stop loss below, and take your 15 minutes. Again, when the 15 minutes are coming back down into the green box, do we see them breaking or closing below? No. They start to get a wick, and a wick closes above. There's your retracement, and then there. You can buy this 15-minute candle, place your stop loss below there, and run it up a little bit. Again, now the 15-minute candles are coming down, getting rejected. So if you want to follow 15-minute candles, you can follow 15 minutes. We can go 30 minutes. If you're a 30-minute trader, same thing. 30-minute candles. Okay, so here's where the 30-minute candles come down to the green box and bounce up. If you're waiting for a confirmation, 1, 2, 3, 4, you see it close near the daily, and then this is where it breaks out. You can go into a buy on a 30-minute candle. It depends whatever time frame you want to trade on. It's all the same candlestick characteristics. Some of us just like to trade on the 5 minutes. We can go into the 1 minutes. Okay, the 1 minutes. We can go into 30 seconds. We can do whatever you want. Okay, there's like a double bottom on 1 minute. Close above, continue to push up. Remember, the top down is just your guideline. Okay, so some traders even start on a monthly. Some go monthly, weekly, daily, 4 hour, hourly, 30-minute, 15-minute, 5-minute. Okay, but then you have, in my opinion, you got too much going on. Your charts might get too busy. You might have too much lines, too much, okay? And then when we're looking at the monthly, maybe we don't need the monthly supply because we're nowhere near the monthly supply. So maybe we don't need that on our chart. You got to ask yourself too, again, are you scalping the markets? Are you intraday trading? Are you looking to swing trade these markets? What are you doing? Okay, because every trader is completely different, guys. Okay, so when I'm trading, I'm not looking. When someone asks me, Ron, when they say, Ron, where do you think gold is going to go by next week or 2 weeks from now, or where do you see gold 3 months from now? I don't know. I'm looking to see where gold is going to be 3 minutes from now because I'm scalping the markets. The last thing on my mind is where is gold going to be 3 months from now. I'm not worried about that when I'm scalping the markets. So that's what I see a lot of confusion on traders. Okay, so on the 5 minutes, we've got our levels. Look at the most recent 5-minute candles getting rejected at the hourly. Okay, so what I do up there is I draw, like for me, this is just personally for me. I've always been doing this. I draw a red box up there to tell me that if it does come back up here, it could get rejected. It could be like a double top. Right now it got rejected here 1, 2, 3, 4, 5 times. Okay, 5 times got rejected here. So pushing down now. Where is it coming down to? Is it coming to 50% of this big bullish candle that started this move? So we have to identify 50% of this area of that body. Okay, if I have a green box, before it gets down to that bigger green box, maybe it's going to hold an uptrend here. Maybe it comes down and this is going to be a higher low where it doesn't even come down into here and it builds. Okay, so this is the zone now where we can trade. And you can either scalp inside or you can wait for a bigger picture. So what I would be doing is today, like if I was or any day, is if volume gets its way up to this hourly resistance and can break above and hold, maybe I would look for a buy. So I would look for a move to come up here, break, because we have to break. We got to get that, even if it's an impulse. That doesn't mean we have to take the impulse, but we got to see a strong green impulse candle breaking out of here. And then when it breaks out, we got to see where it closes. So if it closes up here, then few things can happen. Number one, it can retrace right back down, and what we do is we look to see if this area will populate with bids and hold here, because if it does, we might fill and then get more buyers to come in, and then we take a buy, and then we could be taking out these previous highs over here, and then maybe we come up to the next daily. That's one possible path that could happen if we look for a buy up there. Another possible path is it breaks out impulsively and closes, but it doesn't retest. It may open ignited, like hold an ignited bottom, and that's telling us that the bids are very, very strong, that are not allowing it to pull back and wants to continue off of the previous candle. And sometimes it's bullish ignited and it breaks the previous high wick, and then it's gone up to there. Okay, so that's like path number two. You can get one that closes above, retests, and then you flip this red box green, and then it moves up there. We could get an impulse candle that breaks out, closes near the high, and doesn't retest. So a lot of traders are saying, Ron, well, I was waiting for that retest and it kept going. Well, that's why you got to understand that price action can give you various different options. So that's why you got to watch how these bodies open and close. So if this one opens and it's holding a bottom, it's ignited, and it keeps filling and it doesn't really break, then you know it's building. Then if it takes out the wick, it could pop and come right up to there. Okay, so guys, are we aware? This could be path number one. This could be path number two. Okay, if we're not aware of this, ask a question, guys. This is the time. We're not really doing any big trading today. Okay, I want you guys to learn this. Today is a very slow day in the market, but we can take advantage of some education. Okay, most of you guys in the Zoom know this, but Lou, what is the safest path to take? It all depends. Okay, not all, like it's hard to say. Okay, always a retest with confirmation is a safe path, but also this is a safe path too. If it's closing near the high and most of the volume is holding near the high and it's not really breaking and the bids are accumulating, that's another safe path to take. But in my opinion, if you get a retest, it's safer because at least now you get a confirmation that this area is holding up. And then what is our next path that could happen? Most of the one that everybody gets screwed up on, it's the impulse. Everyone buys the impulse without letting the candle close, and then the market gets rejected and then closes back below here and then does something like this. Okay, so that's the fake out. Okay, so path number one, this is the break, close, and retest. This is, in my opinion, the best pattern because it gives the highest probability for success and confirmation. And then when you get it rejected off of here, then you can feel comfortable placing your stop loss below because it's already been confirmed. That doesn't mean it's going to hold and be 100%. It just holds that time in the market. It might need to come back down and test it again. That's what's called a double bottom. It might need to test it a third time. That's what's called a triple bottom. So it's not always, it's always going to happen. Okay, this is just, and you got to make snappy decisions trading in a live environment. Path number two can come up, close, stay ignited, and continue pushing. Path number three is the fake out, where it comes up and everyone's excited and they all buy on impulse. Then it closes, it doesn't close up there, it just gets a wick and then pushes and closes below here. But you're already in a buy because you bought the impulse. Then it retests this and then gets rejected. Then all of a sudden you're getting your stop loss hit. Okay, so those are three possible paths. There's also many more, but that's just in general what could happen. I'm going to show you another path now. Okay, so if we're looking for buys, we're looking for those type of buys up there, but it could also come up here and then be like we're looking for volume to close above for a buy, but we could also look to sell. Okay, A lot of traders are just looking for buys and they're completely forgetting that maybe I could sell this move. So if it comes back up to here and gets rejected and it pushes down like this, why are we not selling this area? Okay, I know we're looking for buys up there, but we could also look for sells. Okay, it's coming to the specific area of supply. If we're looking for those buys to see if it can push and close above, but if it comes up here, that might be a nice double top to maybe short. So also, if it gets like an impulse and gets rejected and you're still waiting patient and it does something like this, then you're ready for that sell. Then you got to go in for the sell. Take the sell, place your stop loss maybe above the previous high, and then take it down, back down to there. And then you can get your pips coming back down, okay? So don't always have to look for buys. The buy is a trade idea. We're looking for something above here, but if it comes up here and gets rejected, that doesn't mean that you got to stop trading, okay? Just because it didn't go into a buy, you can short it down, okay? So that's one possible path. Now, with the volume coming down, so we're away from this daily and this hourly. If you want to start to get a little bit more aggressive, you can start to bring it down, okay, to here. If you want to get a little bit more aggressive, you can bring it down to that hourly. Okay, now look at where I'm looking for a buy. Guys, I'm not doing this like if the markets are moving, it's a live environment, but I'm trying to teach, okay? So if we see a candle body close above here in a retest and I'm not taking it, I'm just trying to teach you guys, okay? So that's why I hate these green boxes, because everyone thinks I'm automatically taking the trade whenever I put these green boxes everywhere. I'm trying to help you guys learn how to trade. And then the same possible paths right here. What could we get? We could get a breakout, a close, a retest, and it's going up there and we all buy, right? Or path number 2, okay? You see the paths are the same. Nothing changes. Path number 2 can come up here, close, maybe catch an ignited candle. It doesn't come back to retest. An ignited bar might push up to there, okay? That's another path. What's path number 3? The fake out, okay? It could come up here. Could come up, impulse. It doesn't close up there because we all bought on an impulse. Now it's coming down, it gets a wick, and then all of a sudden it closes down here. It's a fake out, come back down, and then the market's pushing down. So you see how I had these 3 same paths up here where I was looking up there? I can have these same 3 paths looking over here. Okay, are we clear on this, guys? All good? Can we move forward? So those are the possible trades. And then now we're coming down into the big green box. So here is possible paths as well. What could we do here? We could look to sell the market below today's daily low, the purple line, and below this green box to come down to the next yellow, okay? But what we need is we got to push, close below, retest, and then push down. Path number 1, to sell down here. Path number 2, to sell. We could push down here, it closes, but we don't get a retest. What we get is an ignited red bar continuing to break the low and push down. Path number 2. What is path number 3? The fake out. Okay, path number 3 is if you go on in impulse, it's a red candle that breaks, but before it closes, we all go into a sell. Let's say maybe it's got 2-3 minutes still left on it. It's a 5-minute candle. All of a sudden we catch some bids down there, and then it's closing back here, and then it's doing that. Okay, so that's path number 3, the fake out. Okay, so again, we're waiting for volume to close below here. Give us that retest. Then we flip this zone, this green one, red, and then we're pushing down. Path number 2, closes below, ignited bar, continue push down. Path number 3, the fake out. Okay, could come down and then pushes right back up and we get faked out of the market. So that's to sell below there, but we can also buy the demand area. Okay, so if it doesn't close below there, the buy. What happens if it comes down right now, comes down, and it doesn't break down there, it comes here and bounces and goes up. Okay, so we could possibly buy that area. Buy here, place our stop loss below. So there's different things that we can look for when we're trading. It doesn't always have to be to sell below here or to buy above here. We could look to sell right there. We could look to buy right here. Okay, we could bring this to that where it was, the hourly. Now, where I can bring it is, remember what I was showing you? 50% of this green candle, the green box going across. Look at what it just did now. Okay, exactly what we're talking about. Okay, do you see how this red body candle just closed below it and it opened green? Where did it come up to? About 50% of the red candle. And if you flip this green box red now, it's suggesting that the volume is below. There it is. Below, coming down to there. So just like a little scalp like that, okay? Some traders like this type of scalp, where it comes down, goes back up, and where do scalpers take it? They can either take it at the when it broke here, and there we go. That drop is about 11 to 12 pips right now, just that candle alone. So if you have a lower spread, 1 or 2 pips, that's 10 pip, could be a pip and dip right into this demand box, because we don't know what's going to happen in here. It could come down, pick up all these bids in here. See the heat on Bookmap? It could come in here and pick up these bids and go right back up. Mark, might be a stupid question. No stupid questions, but as price action traders, does the market sentiment mean much? I know it's good to know. Yeah, market sentiment is everything. So momentum of the market. If we're scalping the market, we got to know the momentum, the sentiment. If the sentiment is bearish, I want to scalp in a bearish sentiment. I don't want to be buying. So yeah, that's very, very important. Everything is whatever is important to swing traders is very, very important to scalpers. We're just doing it on a smaller time frame. Sentiment, like I might see, like right now, the sentiment is bearish right now. So if I had that bearish sentiment in my head and I see this candle close below and retest, my sentiment is still bearish. I take that sell on that candle coming in. But now I know it's coming into demand. So if the market is giving me 10 or 12 pips, I got to make a decision. You got to make a quick decision. A lot of traders cannot make quick decisions. When it comes into here, they're holding and they're holding and they're holding, but it could just bounce right back up and you lose your 10 pips, 12 pips, because it's coming into a demand zone. Okay, see how it comes down and right back up, because we just came down there and we picked up those bids that were waiting down there. But we still have a lot of time left on this candle. It still has 1 minute to go. So we're going to watch where it closes. Okay, it might come back down and close near the low. It might close right in the middle. It might push back down again. It might close near the high and start to break out of here bullish. Okay. Does this make sense, guys? Does that help? Okay. Any questions about this? And now we'll move on to a different chart. And then you see what happened on Bookmap. Okay, we were above the VWAP. We couldn't push any higher. And it came right back down to the VWAP and broke the VWAP. And now we pushed down, and then it came into the first pool of liquidity where there was bids in the market, and we could see where they were. Okay, and it's in our green zone. So like a trade like this, if you take that trade, or if you were in a big sell coming from over here and you're in all of that profit, you need to make a decision when it comes to a green box. Either you don't, okay, again, now there's options you have down here. Number one, easiest way is to close your entire trade. Okay, you can do that. Get your money and get out of the market. Option two is, if you don't want to close your entire trade, close a portion of your trade. Close half of it, 50%. Close 60%, 70 or 80 or 90%. Close it. Pocket that money. Leave the remaining percentage running with a break even. So if you close half, you closed half right there. Let's say you took a sell right here. You just closed half. Now your remaining half is at break even, and if this thing continues to move, you get more money. Okay, that's one possible scenario. Another scenario is a trailing stop loss. Wherever you sold, you bring your trailing stop loss below structure and you hope for the best. You hope that this thing will pull back and it won't break any highs, just be a lower high pullback and continue pushing down. But that causes a lot of stress and anxiety with a lot of traders because they're sitting watching. Some traders need to take a trade like that. When they go into profit, they set it and they forget it and they walk away. And sometimes when they come back, it's in profit. Okay, but for us as scalpers, it's difficult because we're watching every single candle. So sometimes we get it a little early, but again, that's the life of a scalper. Okay, so sometimes I'm telling you guys from my own personal experience. Sometimes I nail exits, I get out when it's coming down. I get the maximum value of that candle, and then sometimes it keeps pushing down. But what happens here? If I took out my 12 pips, I would have probably made the right decision there because now it came right back up to where I would have entered. So guys, I don't trade with I would have done this, I could have done that, I should have done this. You got to trade with a set plan every single day, every single candle, whatever time frame you are. You have to have a set plan, and that will keep you consistent because a lot of traders are just guessing every single day. They're saying, maybe I should take out my full position here, maybe only half here, maybe only 10% here, maybe I'm going to try trailing stop loss today. So that's 4 different strategies right there, and I can see that why you're confused because you're trying so much. And when you ask me what is mine, I have just one approach. I get in and I make a decision real quick, and that's it. If I have time to leave a runner, I will leave a runner. Sometimes I don't have time to leave a runner. Sometimes I'm trading 1-minute candles. They're very, very fast. They're very erratic. So you got to make decisions very, very quickly. So you have to have a set plan. If you don't have a set plan, this is something you need to work on this week. I would recommend you work on it. Okay, it will make you a more consistent trader over time, and with consistency you can become more profitable, because if you're guessing on every trade, you're going to get lost. Okay, and now the market is kind of consolidating sideways from here to here. This is where the volume is now. Okay, so we're right in the middle. So what is the next possible path? We might push and close above here and come back up. So you see how it came right into that demand area? Right in there, it came in, picked up all those bids. So all those sellers that came down in here, they kind of got exhausted. They couldn't find any more bids down here. See, there's no like green bubbles down here. The green bubbles started coming up here. So they couldn't find anyone to transact down here. That's it. So the bids were higher. Now the bids are moving away from this selling pressure. And it came right in red for 12 pips. You could have liquidated down below there. That was our webinar we had last week, where it was close your position on the strength of a candle in an identified zone right there. You could have closed that, because now you're either at a break even or you're in drawdown, and then you got to hold a trade. Okay, we're going to move on, guys, okay? What do you guys... Okay, so are we clear on US 30? All good for US 30. Let's move on, because I see some of you guys want another chart, okay? But again, I'm going to explain this, guys. It's not the chart. It's what I just explained. This chart can be NASDAQ. This chart can be S&P. This chart can be gold. This chart can be oil. This chart can be Bitcoin. This can be GBP USD, Euro USD, GJ. We could be looking at corn. We could be looking at soft lumber. We could be looking at coffee beans. We could look at anything. Do you guys understand what I just explained here? Because some of you guys just want to go look at charts. This is very important, guys, because we're giving you some nuggets here. Believe me, you might not think that this is really good information we're giving you, but this is some good information. I would have loved if someone taught me this back in the day. Okay, what do you guys want to look at? NASDAQ? Do you guys want to move on to NASDAQ? Do you guys want to move on to gold? What do you guys want? See, because we could be possibly, when we move, we miss out on a buy. Okay, do you guys understand? So this could be a possible buy situation right here. Sometimes impulse. I was gonna explain what an impulse candle is, but okay, because sometimes some traders take impulse candles too. So you got to see how they're being built. Where are they being built? Why are they being built? Why should I be taking an impulse candle at this time? Okay, we'll look at gold. Let's take a look. Everybody has this love with gold. My goodness. Very strong move. Let's look at gold. For me, Dennis, I don't care. I'm not trading today. Today is my day off, Dennis. I'm only going to go for like another hour and I'm out. Got a lot of things to do. Do I not like gold? Joshua, I've traded gold for 5-10 years of my life. So I've moved away from gold. I don't know why. I have my favorite, just like you guys have your favorites. Gold is your favorite. US 30 is my favorite. I find gold is just, it frustrates you. It's very frustrating security to trade for a scalper. Okay, some traders are going to say, Ron, I swing trade gold all the time. I do really well. I'm going to say, God bless. But as a scalper, trading 1 minute, it can get very, very erratic. A lot of fake outs. But okay, so let's go look right now. Is anybody in buys on gold? It's breaking out really nice right now. Coming up to, where could we be coming up to? 1950. Psychological area 1950. So I'm going to do a quicker top down. Okay, I'm not going to take as much time as we did on US 30. But can you guys do a top down and then maybe we'll match up our levels and see how we do? Or do you guys already have it done? Okay, so let's go a little bit on the daily. Let's see. So gold, we hit, okay, this big breakout candle. Do we remember when this happens? Okay, I remember, and I don't trade gold as much as you guys, but I remember exactly what happened up here. So you guys should too. This was Thursday after hours, 6 p.m. Gold shot up to here, almost tapped all-time high, 2068, and pushed down. And since then, we've been making lower highs. Continue push down lower lows, lower highs, continue push down. Now, where are we? So we broke critical levels. 1950 is a very psychological area in the markets, always. Okay, and now this is what we're attempting to come back up to. So last week we had Wednesday, Thursday, Friday was like an inverted bar, and today we're coming up. Remember, this week, Friday, we have NFP. Okay, so it's going to be very volatile for gold this week. So right now, high and low of the day. I have my low of the day, 1940, purple line. We're at the high of the day right now. Okay, you know when I'm looking for a top wick, there is no top wick. We're right at the high, around 1949. So we're very, very close to that 1950. If we can break 1950, where do you think we're going to go? Maybe we might come up to test Friday's high, maybe 1957. Okay, that's where it could possibly go today. Let's draw a yellow line up there. But then there's these wicks down in here. Okay, so 1957 is the entire range. Okay, and it's about right here. See this big red candle? About half of it is right there, 1950. There's the halfway. Okay, 50%. But I have a wick right there, 2 wicks, and another wick right there. So let's say maybe we push a little bit higher today. Maybe I'm going to place like a yellow line right in here at this wick and that wick. 1954. Okay, so before we get up to 1957, maybe we come up to 1954. If we continue to break out, then 50% of this big red candle on Wednesday is right there. There's the wick too. 1964.65. So I'm getting a few daily areas. And then up there, I'm going to place a red box. Okay, 50% of this, place it red. Just in case it comes up here, it might get rejected on the daily. Where's our demand? Okay, so we came down to 1939 and went back up. Friday, we came down to 1936 and went back up. Today, we held 1940 and came back up. So this is telling me that there's a little bit of a demand being created right here in the market. Okay, and when you look to the left, did this area hold? It did. It came down here and went right back up. It came down here and went right back up. Okay, so that is a good area. Now what we have to do is bring this in the future. Bring this in the future. We've identified 2 critical zones. Now we're coming up. Okay, so strong daily candle. We opened, it came down red. We found our bottom, 1940, and now we're coming right back up very strong near the high. So again, what we can do is we can go into a 4-hour or we can go into a 1-hour. Okay, so I personally like to go into the 1-hour because the 1 hours break down. I like to see the markets. I like to see how it was trading in the Asian session. I like to see how it moved London open. I like to see how it moved in COMEX 9 a.m. Eastern. So some of the big moves we can see. Here's futures market Thursday at 8 p.m. Eastern. Again down here, Friday Wall Street bounced off, came up, coming back down. Sunday Asian session market open in here. When did we hit down here? Okay, here's London, 3 a.m. 4 a.m. it came down and bounced. So we're holding strong. Are we building some hourly support at 1944? Yes, we are. This is hourly support. Let's place a white line here. Okay, so strong white line right here. We came up, volume, retested, held. Now we got a nice big bullish candle. Are we breaking out of our hourly resistance? Yes, we are right now. Where's our hourly resistance? Where most of these bodies closed. Like right here, 1947.50 area. Okay, so we're pushing. Now, where could this hourly candle that's going to close in about 6.5 minutes, where could it go? So we have an hourly wick at 1950, and then we have another hourly wick at 1952. Okay, so where's most of the concentrated volume? A lot of it is up here. So I'm going to place one more hourly line right here. I get that wick, wick here, body to bodies. Here's another wick. That could be where we possibly fill up to. This white line, and then there's the daily. So it's a nice strong like triple bottom. 1 bottom, 2, 3. Now it's coming right back up. So if we're following this on the lower time frame, and then where's our hourly? Okay, see where the hourly spike was? It came up here and it got rejected right there and pushed down. So if we're locating an hourly supply in the market or resistance, maybe up here. So before it can get up to the big red daily, there's hourly. Okay, what happens if we just come up to here and that's it, and it gets rejected and goes back down? Okay, then we'll have this imbalance for maybe another time. But right now it's pushing up strong. So you can go into the 15 minutes. If you're a 15-minute trader, you can go in the 15s. If you're a 5-minute scalper, you go in the 5 minutes. Okay, so this is the 5s. So very, very strong move. Okay, so what we can do is we can identify this new hourly white line as the new demand zone going forward. If we can stay and we hold this, any 5-minute pullbacks, we're going to see if we can hold this area. Okay, and if we can't, if it comes back down, what we're going to do, we could look for a possible sell below here. If it cannot hold, might sell back down to that hourly. Okay, let's add some indicators on our chart. Okay, so a 9 EMA. I know most of you guys use a 9 EMA. 9 EMA is we are above the 9 EMA. Okay, strong. We're moving away from the 9 EMA. Let's add the 200 EMA. The 200 is right here. That's kind of like where we have a crossover. This is where the lower time frame EMA crosses the higher time frame. So we're moving bullish. So we're above both EMAs. That's good. Let's check RSI. RSI is extremely overbought up here. Okay, so we're approaching 78 on the 5-minute RSI. So that's an indication right away to possibly sell, because something is overbought. You got to sell. But sometimes with gold, this thing could continue moving. It could be also just small pullbacks, and then continue rising. So what we got to do is we got to kind of find where would this thing maybe possibly get like a double top. So this is now 5-minute structure to the left of the chart. It came up here a couple times and got rejected up there. So maybe if I bring this red box across from over there, this might be my 5-minute level where it starts to get rejected. Okay, so we got to see something. We got to at least see if gold can come and transact in this red box. Maybe it gets rejected back down to this daily. It might come back up again here. Maybe get rejected again with supply. Then it breaks and then pushes down here. So that's where we could possibly look for a potential sell. Okay, this is for the bigger sell if it breaks the structure of the hourly. But we can start to position ourselves maybe for a sell below the purple line, 1949. We're going to see, can it consolidate now in between kind of that supply and this daily area. So this is where we're setting up like our zones, and we watch the volume to see how it reacts in these areas. Okay, if it pulls back and remember guys, I'm measuring the move too. So if I was to take this sell on gold, you got to measure the move down to that green box so there's no surprises. Okay, I always measure a move. Every single trade before I take it, I measure it. If it comes down to half of that green candle, it's only 6 pips. If it comes all the way down to here, it's about 15. 1.5. So right away, if I'm taking this trade, I'm already factoring in. I'm minusing my spread. I check my spreads. 1.5, let's say 1.5. That's factored in. You got to factor in maybe 1 pip of slippage if something happens. So you got to maybe give away 2-3 pips on slippage and spread. So if the total move here is 15 minus 3, you might net 10 or 12 depending how quick your executions are. If it comes down to there, that's it. That's how much you can bank from here to there if you take that trade. Unless it continues to push down, then if it does, you might get 20 pips, maybe 25 down to that 200 EMA. Okay, if that's not a big range for you, then guess what? Don't take that trade. You wait below for the bigger hourly move. Okay, this is more for aggressive scalpers in here. And then if it also cools off, and what could happen is it could continue moving bullish. It could just be a pullback and continue to drive bullish. If that's the case, then we can look for buys continuing above here. And then maybe it will come up to the next hourly and break out further and continue pushing up. And then you look to the left. Could fill like right here where it filled and it got rejected. So here it's such a short move that you might not have time to react. So this one is, you got to really hold this position unless you're looking for about 8-9 pips. But it's very short. It might be short and fast. It might just come up here green, catch a wick, and go right back down. So that's why you got to know what type of trader you are. You got to understand what you're trying to get out of this. Okay, so that's gold. We've got a nice big move. But we'll see how it reacts in here. Maybe it's going to push back down a little bit down into here. Okay, so what are you guys' thoughts on gold? What do you guys think where are we moving today on gold? It's about 1950. That's that psychological area. Do you guys think, let me ask you this, do you guys think that we're going to break above 1950 and continue heading higher, or we're going to come right back down, maybe down to 1947, 1945 area? Scotty, 1910 if we drop. 1910 is a little bit far away from 1950, Scotty. Longer term, yeah. I don't think we're going to see a 5-minute candle drop that far unless there's something crazy going on today. I think it's going to be a ranging day. I agree with you, Auspicious. I think it's going to be a range day. So if you're trading today, make sure you understand that gold could be ranging. Okay, so for a sell side, like you see here, see how the red candle closed below and it came up and it retested and broke. So if you're in a sell, you could be in a sell right now. Okay, that's where I had that green box. I had it here. Okay, so you could be in a sell. And then everyone asks, where do I place a stop loss if I go in a sell? Well, you got to ask yourself, okay, where do you think is the most logical place to place a stop loss if you take this trade? Number one is you want to be above the previous high, okay, because you need to be protected by the previous high. So that's one area for a stop loss, is if you took that trade and your stop is above the previous high, you're risking 10 to 11 pips, okay? So some traders might say, holy, 10 pips is a lot, but all you are is just right above the previous high, okay? So if 10 pips is a lot for you, you need to really decrease your lot size, because if you're panicking with a 10 pip stop loss, all you are is just above the previous high of the previous 5-minute candle. So 10 pips is nothing, to tell you the truth. But if you want to move it up a little bit higher to be at that supply, now you can see you're about 20 pips stop loss. Okay. If you were to take that, where to place a stop loss? So if you're taking it 20 pips up there, your reward should be at least 20 pips. You should be trying to hold it for the full 20 pip move, which could be down to there. But some traders don't trade like that. A lot of traders don't trade with just a straight R&R. Some traders will just, like myself too, sometimes I don't trade with R&R. If I take a trade and I set my stop loss at 20, that means I have to make 20 pips. Like some traders trade like that. Some traders are different. I want to make that clear. So I might take this initial trade and I might have 15, 20 pip stop loss, but sometimes scalpers nail trades where they go automatically right into profit, 15, 20, 25 pips with zero drawdown. So at that point I'm just taking my stop loss, going to a break even, and I'm in profit. And then when it gets down to 10, 15, 20, I'm making a decision what lot size I'm using, how much I want to take out of the market. So scalpers got to think very, very fast. But if you're one of those traders that set it and forget it, if you're risking 20 pips, yeah, you don't want to just make 5, okay? That's a bad reward. If you're risking 20 every single trade to make only 5, it's not good R&R. So you got to make at least, give it room to breathe. If you're giving it that full room to breathe, you got to give it room to breathe to maybe come back down into this green box. So if you're getting caught in a pullback, you got to kind of go with it. You got to leave it, okay? But see how it just came right down to the 9 EMA? That's why these EMAs are good to use for some traders. See how it came right down to the 9 EMA and cut a wick and went right back up. So it's continuing with this uptrend. This was just the cool off. So if you're an RSI trader, when something is up here at 77 and you sell, see how it just comes down to 70? And that's all the move it gave you, okay? So I'm trying to show you that move that broke down, it's only 7 pips. So that's why if this is too aggressive for you to trade in here, don't be trading in here. This is a very aggressive zone. You might need to stay below this hourly. Okay, and also for potential buys, maybe you stay and wait above this supply area if it's going to continue to break out bullish. After it consolidates a little bit in here and collects more volume. A gold signal was sent out. Okay, let's take a look. 1948.50. Okay, 1948.50. Let's just find out where that is. Okay, so 1948.50 right here. So, okay, so what we'll do is we'll wait for volume to close below 1948.50. Was this candle, did any volume close below? No. That impulsively broke down and went and closed up here. So we'll wait down there to see. I'll even place an alert on my chart too. At 1948.50. Okay, so we have an alert here. We're going to watch to see if we get some volume below here. Potentially we need to get that nice double top coming up to the supply area to maybe catch that sell coming down there. Okay, so that's gold, guys. We're a little bit overbought up here, but it could still drive. Okay, gold could still drive. What questions do we have? We're going to go about 30 more minutes. Today was more of education, guys. There's not a lot that we can be trading except for that US 30 buy right next to us. Okay, how many of you guys, okay, see, number one, what are our options? What do we have? Did volume close above? Yes. Did it come back down to retest this? Did you guys flip this red box green? I hope so, or else I'm just wasting my time here. Did you guys do this? Flip that. There's another one. There's another pullback you could have bought, and you're in a buy. Okay, buy, stop loss below here. And that's right there. That's a nice trade from here up to there. 20 pips right now, okay? So it came into the big demand box right here, right here. This is where those sellers couldn't find any more bids down there, and in the market bid right back up. And it came nice and it closed above. It also gave us the confirmations and continued to move. So you got to give it a little room to breathe. If you bought any one of these candles, maybe your stop loss was below the structure. So I'm just going to show you with a ruler, because traders always ask, Ron, how much pips do you risk when you take a trade? Well, I'm going to show you. If you took a trade anywhere here, okay, and you had your stop loss below these bodies, like right there, that's about 13 to 15 pips. If you were below the previous low, like this red wick right there, you're risking 20 pips. 20 to make 20. That's a 1-to-1. So you risk 20 pips to make 20 pips. But when you go up 20, now you can take your stop loss and go to break even. Now you got a risk-free trade. Philly, you took that buy. Nice. Yep. Okay, and gold now is just barcoding. Green, red, green, red. So we're going to see if selling pressure can push it down and close it below 1948.50. Okay, guys, do we have any questions about price action? Anything? Because sometimes when it's a real busy market and we're trading, we might not have a lot of time to answer a lot of the questions. So we want to use today to answer questions for anybody in the Zoom, YouTube. Do you guys have any questions? Dennis, you got your daily goal reached? Nice. Am I just using, it's not an SMA, it's an EMA. It's an EMA, not SMA, but 9 and 200 if I do use them. Do I take one-to-one trade mostly? Guys, I trade the markets. I don't care if it's a one-to-one or things like that. I just mentioned that, okay? Don't get so caught up on these risk to rewards, okay? I know a lot of traders that will only take trades only if they get a 1-to-3 on their money, where they risk 10 pips but they got to make 30. And they're not profitable traders, and they're not good traders, because all they're looking at is for their 1-to-3 to hit. Sometimes you just got to trade, guys. You just got to trade these markets. Stop getting so caught up on, I have to hit a 1-to-3 or else my trade is void. No, sometimes as a scalper, I just look to take a position, I get in, I risk the 10, 20 pips, whatever it is, but sometimes I go right into profit right away, where I don't have to risk anything. So, no, I don't trade like that. I'm just being honest with you guys. A lot of traders I see have difficulty because they're just trying to trade for these risk to rewards or things like that. Okay, so gold closed below. Okay, so see here what we're watching on gold. Gold now closed below the target. 1940. So here's the retest on gold. Yeah, that's a possible sell for gold, guys, right here. Yep, you can sell gold right now. Okay, why? Because, first of all, volume closed below. Okay, so it's now retesting. Did it come up and get rejected? It did. So now it's sell. Okay, and okay, so I'm just going to remove this green box to show if we put a stop loss in the market, where to maybe place a stop loss. So if we're in a sell now, stop loss. Okay, were we just not talking about if you place it above the previous high? And so that's not a good risk to reward. 0.7. That's not good. Okay, so if you're risking that much, maybe you got to look for your 1-to-1 breaking down there. But you got to give it some room to breathe. You don't need to give it all that much. Okay, if you want to be like that 50% trader, maybe you're going to test 50% right here. But remember, 10, 15 pips is a tight stop loss. Some traders give it 20, 30 to break down. We still got it. This thing could pull back, but if it breaks down, it could be a bigger move. So you got to give it a little room to breathe down here. Okay, so we'll follow gold too. US 30 looks nice, coming right up to that daily. Holding the VWAP, picking up the bids. The bids are accumulating. So maybe we can get the bids to come up to this level right here. 33,220 for US 30, and that would be like that big red box coming up in there. So if it pushes all the way up there, you're in a buy on US 30, should think about maybe liquidating a little bit of your position because it could get rejected up there. But that would be nice if it can drive all the way right up to there. And what I do too, guys, is I manipulate my trading. Okay, so if I'm feeling something out, if I'm testing something out, I use a really small lot. I use something very, very insignificant, like 10 cents, and I'm getting a feel of how the market is moving. So I don't really use my little feeler trades as going into my journal or looking at my profit loss report. My only ones that I really calculate are like my normal trading sizes, but the little ones that I'm feeling out, I'm testing out the market. So that's another thing that I use that some traders don't use. I use sometimes feeler trades when I'm testing something out. There's an area in the market that I want to get emotionally involved in. I want to test it out, but I don't want to go in with full trading sizes. I use smaller sizing to get a feel of how the market is moving. Once I understand how it's moving, then I'll start to add my positions. So that's another thing that I use that some traders don't use. Yeah, so we've mentioned that the markets are kind of closed today, so gold is going to close early. US 30 and all these are going to close early. So that's why, guys, today was just a more of an education session. If you guys are going to continue trading in the afternoon, you guys got to be well aware of your broker, well aware of the markets, well aware of the security that you're trading, so you're not surprised, because you might get into a trade and all of a sudden 1 p.m., 2 p.m. Eastern, and that's it, the market closes and you're stuck in a trade. So you got to know today what are the hours, so you know to maybe close trades unless you're going to hold trades going into after hours and things like that. Okay, but also US 30, guys. Okay, very technical. You see how it came right up to that yellow line? Sometimes you got to make a decision up there. This is what we tell you every single day. You might need to make a decision up there, because if you don't, all of this 5-minute volume came right up to the daily, and it's a counter trade because this was the big sell. So it came back up to the daily. If you don't make a move up there, then unfortunately this is what happens in the market. It pushes down. Okay, so if you bought anywhere here and you came up 22 to 20 pips and you didn't do anything, now you're only in 5 pips of profit. Okay, so that's why I stress that webinar, when you're coming to an identified area, you might want to liquidate, close your position. We gave you the options. Close the entire trade. Close 50, 60, 70, 80% up there. But take some money out of the market. Don't get greedy, because if you get greedy, this is what the market will do to you. We've all been there. That's why I keep saying this to everybody, because I have been robbed quite a bit in these markets. Okay, so gold. Let's see if gold can come down to this target. And then once it starts to move down in profit, you can start to reduce your risk by bringing your stop loss down, lower. You don't need to always keep your stop loss up here. If you start to go up in 10 pips in profit, or 15 or 20, then you can reduce your risk by bringing your stop loss down to 50%. Hopefully when you get enough of a cushion, you can come down to a break even, and then it's an easy trade to manage because you're directly right into profit. Yeah, these are the futures we're trading right now, and the bond market is going to close today too. Or the bond market is open, but it's going to close at 1 or 2 p.m. Eastern today, if I believe. And so stock market is closed. So in 13 minutes, it's normal Wall Street open, but we're not going to get a big Wall Street open. Stocks and equities are closed today. There'll just be some typical news, trading in the market, and things like that. So I recommend everybody takes a day off today. But if you want to practice your trading, you can. But again, look at your spreads. Do you guys have good spreads with your broker? Is it worthwhile trading? Like if you took this gold trade right now, what is your spread right now? Do you guys have good spreads? I can't believe how many traders don't even look at spreads. They just look to trade. And then they find out later, when they're in so much drawdown, that I find out that they're trading gold with 5 pips of spread. Yours are the same like other days? Okay, that's good. Because sometimes some brokers have higher spreads when there's bank holidays. 1.2, 1.6, those are good spreads. But if you have like a 3, 4, 5 pip spread, on a day where there's low volume, where there isn't the big moves in the market, it's probably not worthwhile trading. Okay, guys, so if you were in US 30 buys, you can't get too greedy, okay? On a counter move that's coming up to the daily yellow line, you got to make a decision up there. Because if you don't, the market will decide for you and possibly take you out at break even or come down and hit your stop loss, where you were in 20 nice pips of profit. Why do I trade it in Forex with a spread? In futures, you don't have spread? Because, Pascal, not everybody trades futures, okay? If you ask me if I'm trading personally, yes, I do trade futures myself. But when you're trying to entertain 1,000 people, not everybody trades futures. Not everybody. So we're trying to accommodate to everybody here, guys. It's not easy, okay? I wish the markets were much easy, where we could just trade one thing all the same. Okay, it doesn't work like that. Okay, so gold, we got a nice ignited bar trying to take out the low, and if it comes down here, this is a target. If we can get down here, Damon, what is the reason to buy Dow? Where, over here? What was the reasoning? Number one, it came into this big daily demand and got rejected. Number two, it came and closed above this area. And then number three, we got retests, all hold. So 3 confirmations tell you to buy
place your stop loss below here, and it came right up to that daily yellow line for about 20 pips, and then you got to make a decision. Even gold, guys. Gold just came down to the hourly target, okay? So now you can take your stop loss and reduce your risk if you want, right there. Okay, but you could also scale out. You could also take a profit down there. Okay, it dropped from here to there is approximately 10 pips. So that's a 10 pip scalp for most traders. But if we're still holding, now it's a hanging man candle. It came down to the hourly and bouncing right back up. Gold tends to do this. Now you got to continue to hold it or keep your stop loss still above there. Damon, thanks, but can you show us how it's daily demand? Were you on the call when we started, when we did our whole top-down analysis? If you can you rewind the live, and it will show you. We did a full, I spent my time doing a top-down explaining why I placed all those lines in that area. Okay, but you see why you gotta, if you're scalping inside, this is why you gotta react fast. Okay, a lot of traders cannot react fast, and that's why they have difficulty scalping the markets. Other traders that react fast and make a decision quickly can understand how to scalp these markets. So sometimes when it comes down to here to there, that you got to make a decision sometimes. Okay, if you're still holding, it's great that it's coming right back down. But there was no guarantee that this candle was going to come right back down. It was coming up. It could have done something like this. So it's good that it's coming down with more volume. Let's see if it can close below here. If it closes below this green box, we might push a little further down. This might be a really nice trade. Okay, is everyone still in this gold sell? Okay, so it's pushing down nicely. Okay, so we're moving, guys. Okay, so we want to see if we can take out the low here. It says you can't close the trade. With which broker are you using? HankoTrade. Yeah, that's why you guys should be aware of your own broker. So that's the thing, guys. If you guys want to trade gold, you have to be aware of your brokers. I try to make this clear to everybody. You got to get to know your security like you know your partner. What should you do? You have the trade open and your broker is closed right now. Well, this goes for everybody. If that's the situation, you gotta hopefully you have a stop loss in the market just in case something happens. But these are what we were telling you, to know your securities and maybe to take a day off of trading or know when your brokers are closing. Guys, this is part of your job. This is not part of my job to tell you guys this. I know my brokers when they're open and closed. This is all part of your job if you want to be a trader, guys. You can't wait for other people to tell you this information. You have to contact your broker. Do they not give you emails telling you about holidays, hours, and things like that? Okay, so if gold now, okay, we're bouncing off the green box. If gold comes back up, we're probably going to test 50% of the red candle. And if it can't hold there, there's that 9 EMA. Maybe it comes right back up. So might pull back up and then continue going back down if you're holding for a bigger trade. But that was about 10 pips, a little bit more than 10, but that's what the market gave at that time. Okay, guys, I don't recommend anyone should be continuing to trade. I tried to say that from the beginning of the call, but you have to know, number one, when banks are closed, your broker could be closed, and you might be holding positions. That's what I tried to tell the entire call. Also today, if you're trading like US 30 and NASDAQ, going into 1, 2 p.m., they're going to close as well, because we're going to have bond market closing. Futures are closing. So that's going to be done. So you might get caught in a trade there. So that's why I recommend everyone walks away from the markets unless you know exactly what's going on with your broker. You gotta understand these things. Okay, and then in 3 minutes it's 9:30. Normally we get that crazy volatility because Wall Street is open, but Wall Street's closed today. There's still going to be some activity at 9:30 because it's a 30-minute candle opening up, and it's going to bring in volatility in the markets. We'll stay for like 5-10 more minutes, and then we'll wrap up the call. And gold is a counter trade too. So like the trend is moving up. So right there, it closed below the hourly and kind of retested. So if you're scalping for 10 pips, got to know 10 pips in and out, get your money and get out maybe. Because when you come to a green box, there's going to be bids there. Unless you're holding, okay? You're holding. You still have your stop loss in the market. You're in profit right now, so you're still holding the trade. Again, if it's lower highs, that's good. And then hopefully the market can continue to break down and take out these lows. Guys, please take the day off today, okay? Understand that. The markets are not the best to be trading. You need to learn the discipline of taking a day off, just like banks. If you want to trade like them, you got to take a day off too. There's nothing wrong with it. If you're in the US, it's Memorial Day. Enjoy the day. Beautiful weather. Enjoy the day. If you're in Europe, all of your banks are closed as well today. Give yourself a longer weekend. The markets will be moving tomorrow morning again in London, New York. We've got a lot of news this week. Okay, so you got to prepare yourself for this week's news. We got NFP, big day. So guys, just stay focused in your trading. Try not to over leverage as much as possible. So you can learn how to trade without blowing up accounts, because you're not going to learn anything when you keep blowing up accounts. So just please learn how to do this without over leveraging your accounts. Small gains add up. Okay, have realistic daily goals, 30 to 50 pips a day. See if you can do that. I know a lot of traders say, Ron, 30 pips a day is really easy. It's easy for one time to do it, but show me that you can do this every single day. Can you get 30 pips today, 30 tomorrow, 30 the next day, 30 next week, and do it consistently for 1 month? Then let's see your progress. Because if you learn how to do that, 30, 50 pips consistently every single day, then when you can grow your account or do a prop firm, 30, 50 pips a day might change your life. Or percentage. If you're not like kind of pips or that type of style, then aim for 0.5% per day. Start off with half, not 5% per day. Half of 0.5%. That 0.5% per day, that can change your life over time if you really know how to do this. But some traders say, Ron, I want to make 5-10% every single day. I say, yes, I would love to too. But can you sustain that? Can you do that every single day without stressing out? Probably not. Maybe 0.5% you can realistically do, no problem, day in and day out, and feel confident doing it. So that's what I recommend for trading. Okay, so you see 930 now is opening up. US 30 is pushing down now. See where the liquidity levels are right here? See all this heat? So maybe this volume wants to come and transact where the high levels of liquidity are. So maybe it wants to come down in here, and possibly it might move back up once it liquidates here. But where it liquidates is the previous low, that wick right there. Okay, and then that will make a new lower low in the market, but it's still holding. Okay, so it didn't come down there yet. Okay, guys, that's it for me. I'm going to go make some breakfast and enjoy the day today. It's a beautiful sunny day. So I hope you guys, this was more of an education session today. There's not much volume going on. Some brokers have unfavorable spreads right now. All banks are closed. It's not an ideal environment to be trading. Like if you come to us for advice, we're trying to give you the advice. We don't want you trading these type of days. Take a day off. You know, there's nothing wrong with taking a day off. We'll come back in these markets tomorrow. There'll be better volume. There's more news. There'll be more volatility. Because if you trade these days and you don't understand the hours or when brokers close, you might get caught in a trade. We see some of our members are caught in a trade now because just weren't aware of when their broker was closing and things like that. So these are all things you need to learn yourself. Don't wait for us to tell you these things, because I don't know what broker you're using. I have no idea. There's a million brokers in this planet. I don't know what prop firm you're using. There's a million prop firms. So this is research you need to study and understand. Okay, I can help only so much, but I don't know all the information about all the hours of every broker when they're closing. They're all different. They're all different around the world. So this is something that you need to look into. Okay. Otherwise, if you don't know, just don't trade these days. Just take it easy. Wayne, you're off to a family barbecue. Nice. It's your son's 12th birthday tomorrow. Happy birthday to him. It's going to be my son's 11th very soon too. Happy birthday to that big man, 12 years old. HankoTrade is back, guys. HankoTrade is back. Okay. Guys, PK, we don't have a post session. PK's got a little Memorial Day cookout. I wish I was there too. And we're not going to, normally on Mondays I have that afternoon session from 1 to 3. We're not going to do that as well, because there will be nothing for us to trade. We'll just be talking. So Jacques, today's your wedding anniversary. Happy anniversary to you and your wife. Congratulations, guys. And happy Memorial Day to everybody celebrating in the US. Enjoy that time. And guys, we'll be back tomorrow for London, and Dave will be back for New York, and we'll go back to regular scheduled programming. So enjoy your Memorial Day, everybody. Enjoy your day off of trading. Take the time to relax, guys. We'll get these pips this week. And thanks for the likes, subscribes on YouTube. And thank you guys. Enjoy your day today. It's a beautiful day. Enjoy it. Okay? And we'll see you guys tomorrow. God bless everyone. Thank you guys.
Hey guys, good morning, welcome to the live session of Stocksnipertrading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Trading with a perfect broker is the key, which takes you one step ahead. At AAAFx, we have you covered. The future of Forex is zero commission. Here at AAAFx, we offer ultra low commission, which starts at 99 cents per lot. Our accounts spreads start from 0.0 pips. With account leverage up to 500x, and can have a minimum deposit of $100, with an additional 100% deposit bonus, regulated by HMC Greece, compliant with ESMA, EU, regulated with FSCA, South Africa. Nothing to lose, but something to gain. Trade with the world's most liquid market provider, AFX, recommended by Stocksnipertrading. To get started, use the affiliate link below.
As a trader, we all look for tight or low spreads, which helps us to get in and out of the market. Using the right broker can help us try different strategies. With multiple options of brokers on the web, here at Stocksnipertrading, we have a recommended broker, that is, HankoTrade. With spreads as low as 0 pips, and leverage up to 500x, HankoTrade is just one click away. With multiple account types to choose from, you also have a minimum deposit of $10. Using HankoTrade's affiliate program, refer a friend and earn up to a 40% commission on trading volume. Built by traders, for traders. HankoTrade.